One of the most incredible growth stories of the past decades has been Coca-Cola. This is one of Warren Buffett's key holdings. He talks about the company frequently. He was buying it in the 1980s, and he bought the stake in the company, he held it, and let it compound. The returns have massively outperformed the market over his duration of holding it, and the company operates in a massive market with an entrenched market position, a wide moat, low amounts of capex, continually growing revenue, and overall, it's a fantastic business. The returns of Coca-Cola since 2002 look like this. They're basically around 7% on average per year, plus it pays a nice healthy dividend along the way, and these are pretty steady returns without taking much risk. Warren Buffett has talked about this company repeatedly as being the ideal investment, a company that continually compounds and grows over time. The other alternative to Coca-Cola, the other alternative that many people look at investing in is the counterpart, which is Pepsi, Coca-Cola's biggest competitor. Pepsi, likewise, is a large entrenched beverage company, but they also own Frito-Lay, so they have a lot of snacks as well. And if we look at the returns of Pepsi against Coke over the past 20 years, it looks very similar, but Pepsi has slightly outperformed Coca-Cola, returning over 8%, whereas Coca-Cola has returned the 7%. Overall, these are two fantastic companies. Two high-quality compounders, two companies with significant brand value, network effects, and dominant in the industry that they operate. Now, while investors are going back and forth between this battle of Coca-Cola and Pepsi, which of the beverage kings is the best investment, there's been another battle waging behind the scenes, one that's less tracked and less followed, one that's less talked about. The new product of this company that was released a decade ago was so revolutionary that it instantly put Coca-Cola and Pepsi in the back burners. The product was this can right here, a green Monster Energy beverage. It looks darker, it looks almost demonic, it looks edgier, and it was like everything that you've had in a soda except amplified, every aspect of it. It had way more sugar in it. It had way more caffeine. It tastes so strong, some people consider the taste to be like battery acid. That is the green Monster Energy. And this did have an appeal. Instantly, this can of energy drink was spread around gas stations, it was spread around retail outlets, and everybody started drinking the thing. Every single kid wanted to have Monster Energy drinks because of how much energy this drink would give you. After it quickly started to spread, there were so many concerns about it, the health-related concerns and even the moral concerns. And people like this lady who non-ironically made an entire presentation about how demonic this black can is.
Look at your M closely. There's a gap right here in the letter M. It's never connected. So you go into Hebrew. The letter Vav is also the number 6. Short top, long tail. Short top, long tail. You could have here in Hebrew 666 on the can.
The can means 666. That's what this lady's saying this can is actually of the devil.
That is a cross. And what is witchcraft? When the cross goes upside down, bottoms up, and the devil laughs.
Now, I must mention, aside from her claims, I think that she's a wonderful presenter. She has incredibly good presentation skills. These type of claims that Monster Energy drink was of the devil and equating to 666 became so popular that Google had to put independent fact checking on it that no, the drink really wasn't of the devil. But that is the vibe that Monster Energy originally had. It was edgier, younger. It wasn't the old washed up Diet Coke or Diet Pepsi. It was the newer, younger, more improved, caffeine-filled and sugar-filled beverage. Now, to say that this drink sold well is an understatement. To say that it took off or that it was a hit is possibly the understatement of the century. It didn't just sell well. The sales skyrocketed. It was selling everywhere, in every retail location and gas station across the country. And the returns of the stock, then named Hansen's and now named Monster Energy Corporation, followed. Let's go ahead and take a look again at Coca-Cola's returns. This is what it looks like again, these 7% or so returns over the past 20 years. We can throw in Pepsi. This is again what that looks like. Pepsi's outperformed Coca-Cola a little bit over the past 20 years. And then we throw in Monster Energy Drink Corporation's returns. This is what it looks like. You can't even see the lines of Pepsi and Coca-Cola anymore. they look flat. They look flat in comparison. It's really impossible to see the other returns because Monster Energy's has eclipsed him to such a great extent. Monster Energy has returned 38% compound annual returns for the past 20 years. 38% per year, blowing away the returns of both Pepsi and Coca-Cola and the broader market at large. The returns of Monster Energy have been shockingly good. It's not only crushed companies like Coca-Cola and Pepsi, it's also destroyed companies like Amazon and Google, companies like Netflix and Apple. You can plug in virtually any ticker symbol, look at the past 20 years, odds are Monster Energy has beat that company. It's one of the best performing stocks in the market over the past 2 decades. Yet it doesn't get the same attention. It doesn't get the same appeal as all these other great companies. So what I want to do today is take a look at Monster Energy. Take a look at what's made this company successful in the past, the way that they've grown the company, and if it's going to have any level of success in the future that will mimic the past. Is this company still a high quality compounder that will beat the market, or have competitors caught up and the advantage has been narrowed? We're going to be looking at it and doing a full analysis in today's video. So let's go ahead and dive right in. We're looking at Monster Beverage Corporation on qualtrim.com. That is this stock analysis website. You can join this website as part of the Patreon membership. It's included as part of it. And there is a free trial. So if you haven't tried it out, I recommend you do. You don't have to pay up front. Now, let's go ahead and take a look at this. We have a $55 billion market cap company. So everything I've mentioned so far is the history of the company. What's been happening over the past 20 years is this company and the leadership behind it has figured something out to destroy every other company's performance, destroy the market overall, and gain massive market share. They've grown their company from a very small one to a $55 billion market cap company. Now, we look at some of the metrics here, and it shows how great this growth has been. If we look at this annually, we have the revenue of the company. Back in 2003, it was $111 million. $0.11 billion in 2003. Last year, 2022, it was $6.31 billion. So anytime a company grows their revenue from 1/10 of a billion to over 6 billion, you're going to have pretty massive stock appreciation. Another thing I'll mention with this chart, and I think that a lot of investors leave this type of thing out, the resilience of the revenue. That is important. If you're an investor, you want predictable companies. You want companies that can keep their earnings over long periods of time. And in terms of revenue, this shows a very resilient stock. It's just grown revenue every single year. And even over the past couple of years, the revenue really hasn't slowed down. Over the past 10 years, the revenue growth rate is 12%. The past year, it was 13%. So they're growing the revenue pretty steadily year by year. My concern for looking at a company like Monster Beverage would be that the revenue growth will slow down as they attract a lot of competitors like Red Bull making moves, Celsius, Solani, all these other energy drink companies. But we're really not seeing that in the numbers so far. The revenue growth remains very strong. We look at the EBITDA. This is a little bit more volatile. It went down a slight amount during the recession 2007. It took a little dip in 2022. I'm not sure why. That's unlike this company over the past couple of years. But we also have the free cash flow here. Look at this free cash flow. Just incredible free cash flow over the past couple of decades. One interesting thing about Monster Energy is they did not start as an energy drink company. During this time period, it wasn't Monster Beverage. That wasn't their products. That wasn't the name of their company. They were Hansen's, this friendly juice company. So they started off as a healthy, friendly juice company, and then they transitioned to an edgy energy drink company. They ended up selling off the juice part of their business to Coca-Cola. So Coca-Cola bought that business, and then Monster Energy doubled down on the energy portion of their business. That is called pivoting, and that is something that this company has been able to routinely do. They pivoted to energy drinks, and they started off with this drink right here, the bright green Monster Energy drink that's loaded with sugar and caffeine. Now, this was really like revolutionary when this first came out. There's a couple companies doing this, like Bang Energy. Red Bull is the biggest one right now. But Monster Energy came out with this new design. It was a lot darker. The drink was a lot better tasting than Red Bull because it was loaded with sugar. And overall, the drink just had a lot of success. But what did the company do over time? They didn't just sit on a single product. They didn't expect that to maintain the growth in their revenue and their free cash flow. They did what good companies do. They pivoted again and again and again. While they started off with the sugary, caffeine-filled drink, there's a lot of reports and a lot of data that showed that this is too much sugar. People were complaining about the amount of sugar in this drink. So with complaints about the amount of sugar in the green drink, Monster came out with a whole new line of drinks that are called Monster Ultra. And it's basically the same idea, except it's with no sugar. So they use artificial sweeteners, no sugar in the drinks. They still have a lot of caffeine, so people still get that caffeine hit from it. And then on top of that, they also made a different taste profile. The green one had a very strong taste, incredibly strong taste, super sugary. And this one was pared back a little bit smoother of a taste. So it caught the attention of an entirely different audience. No longer was it so unhealthy getting that sugar hit from the green Monster Energy. Now you're drinking zero sugar, it has a pared back taste, but it's still giving you a good amount of energy from the caffeine. And they came out with a number of different variations of this. At the time, Red Bull really only had their one flavor. That was the most popular thing, the original Red Bull flavor. Monster Energy was the one creative enough to come out with all these different flavors, continually adding to them. And Monster Energy has an incredibly good way of flavor profiles. They do an excellent job with every single flavor. You can go ask people that drink this drink and they like typically all of them, switching off between different ones. So that's one of the things I want to highlight about how good this company has been at managing their product releases. They came out with one, it was a massive success, but they did not stop there. They didn't do what Coca-Cola and Pepsi did. They kept venturing into new categories, going into the sugarless ones. They came out with a different flavor profile, and then they came into another different category, Monster Rehab. This one, they say, it's after 4 now, your head is pounding, so many questions. You got to meet everyone downstairs in an hour to do it all again. Not a problem, you're a professional. You crack open a Rehab Monster watermelon and let the watermelon infuse electrolytes, vitamins, botanicals work their life-giving hydration magic. Congratulations, you're back from the dead. The Monster Rehab, a recovery drink that has electrolytes and vitamins in it. Doesn't look like it from the scary monster symbol, but it actually has some good stuff in it. They built the Monster Muscle. You want to get your protein shakes for the day? Now they have a protein version of Monster. They built the Monster Java. Premium coffee and cream brewed up with a killer flavor, supercharged with Monster Energy blend. This is a highly caffeinated coffee version of Monster Energy. Again, they're doing it in their style. They have a ton of different flavors. There's something for everybody in this category. They have the Monster Hydro for sports enthusiasts. This is kind of like their version of Gatorade, just done the Monster way. They have juices. They actually came out with an entire Monster juice line, again, with lots of different variations, lots of fun can designs, and they do it their way where it gives you lots of energy, which people are addicted to. People are addicted to caffeinated beverages. Starbucks knows that, Pepsi knows that, Coca-Cola knows that, and Monster Energy has taken advantage of that probably more than any of these companies combined. The whole point of their company is energy. Now, on top of doing that, Monster has also leveraged a form of advertisement that I think is more effective than traditional media. While Coca-Cola still advertises on cable and in movie theaters, they have their general advertisements, and Pepsi does the same. They advertise in the Super Bowl and on cable TV. Monster Energy really focuses on influencer-led advertising. They advertise with different popular sports figures with large social media followings, and then they have them do shout-outs of Monster Energy. They do that form of advertising. So dollar per dollar, I think that Monster Energy gets a lot from their advertising. Overall, the story we can see painted here is that Monster Energy has not been a company that's rested on its laurels. It's not a company that said that we've achieved a lot, we're done, we're going to just coast from here. That's not what they've been doing. They've been pivoting, adapting, building, looking at different companies and seeing what they can do better. They've grown into entirely different product categories. They've grown their lines of products significantly. On top of that, their distribution strategy has been incredible. While they've been boxed out of distribution in restaurants because of Coca-Cola and Pepsi, they haven't had any troubles getting their product out. It's at every Walmart, every gas station, and they do a ton of sales on Amazon. They've heavily leveraged Amazon. Amazon recently released a new update that shows some of the statistics about their sales on certain items in the past 30 days. So we have right here that the green Monster Energy sold 10,000 the past month, 30,000 for the white, 10,000 for the pink, $8,000 for the orange, and on and on. Monster Energy has all of their drinks listed here, and you can see that they're selling tens of thousands of these every single month just on Amazon, outside of gas stations and retail locations like grocery stores like Walmart. So they've leveraged this wide distribution, making it so that they can still get their product out, even with the big players like Pepsi and Coca-Cola traditionally controlling this type of market. So the Monster Energy team has done an incredible job at being adaptable, being able to pivot their business model, being able to grow into all different categories, to have excellent advertising strategy, and have a great distribution strategy. They've really done a phenomenal job managing this business. I think most of the success from Monster Energy has been a combination of the immense brand value. People love the brand Monster in combination with their operational excellence in the way that they've managed this business. It's been really phenomenal. The free cash flows show this. In 2000, they had essentially no free cash flows, and we've seen it grown into the category right now. It's stalling out, at least it's settling out at around $1 billion per year in free cash flow. Some years above, some years below, but that's sort of the mid-range over the past 5 years. So it's a $50 billion company that is producing around $1 billion of free cash flow per year. Seems a little expensive, but we have a great company with a great profile here, so that doesn't seem absurd. I don't think investors are dumb for buying this company. We look at the stock-based compensation here to see if there's any red flags. Are they a tech company that's diluting away all of their cash flows? No, they're not. They don't have a lot of stock-based comp. In fact, over the past 5 or 6 years, there's essentially zero growth in their stock-based comp. It's really flattened out. The free cash flow has been growing. The stock-based comp has been not. That's something we'd like to see as well. The free cash flow per share has grown quite nicely as well. This is what it looks like. In my opinion, the free cash flow per share is the best measurement of the intrinsic value of a company. It's the best gauge to see if that's growing over time. Obviously, it's been growing very strong over the past 5 or 6 years. And then Monster is a company that converts all of these metrics really well. So they have great net income. The net income growth has been 14% over the past decade. It has had a little bit of a downturn over the past couple of years. If I was to guess why that is, I think that they had a really good year in 2020. Everybody's stuck at home. I think that led to a lot of buying of Monster Energy, but I look at that as a positive thing for the company at large. I think they got a lot of new customers that are probably addicted to their products that are going to habitually buy them in the future. So I would expect to see this be a small reversion to the mean and then continuing on with its long-term trajectory. That would be my guess of what's going to happen. Now, another thing I like to see with this company is the balance sheet of it. It looks as if the data is wrong because there's no debt here, but that's just the company. They have no debt. They have literally no long-term debt, and I can't see any capital leases as well. So all we have here is cash, and they currently have $2.6 billion in cash on hand. So this company has a phenomenal balance sheet. They have billions of dollars sitting around that they can use for different acquisitions. They can use to invest in their company, to do whatever they want. But they are not in danger of ever going bankrupt. They can make it through any difficult times. Another thing I'd like to highlight about Monster Energy is how asset-light this business is. They don't require a lot of CapEx to run the business. Just like Coca-Cola, where Coca-Cola does not do their own bottling, they have another company do that for them, Monster Energy followed in their steps. They don't focus on bottling and doing the CapEx heavy stuff. They have another company do that. Their business is focused on just selling the drinks and doing the advertising. So their CapEx requirements are very low. We're looking at $90 million here, $70 million, $100 million. This is per year. This is for a company that does over $6 billion in revenue per year, and they have CapEx that's anywhere between $50 and $100 million. And it's really not growing over the past couple of years as well. So overall, I really like this business. I like the fact that the management has a proven ability to be able to overcome challenges, to grow their business in different products and categories, and to adapt and pivot. And they've created phenomenal results doing that. They've also kept a CapEx light approach, making their business highly efficient. And they're still adapting to this day. They're still looking for massive growth paths. The latest news is they bought a brewery company. They want to get into alcohol. So they did a small tuck-in acquisition, $330 million purchase of Canarchy Craft Brewery. They did this to get into the business. This is their foot in the door. They are looking for more ways to grow in the future. Overall, an incredibly impressive, strong company, and the results show. The big question for investors now is, what does this mean for the future? What's already priced into the stock? As you can imagine, with a company that has this incredibly good of a history, this good of management, investors have been catching on and bidding the price of the company up to a more full valuation. It now trades at a forward PE of 32.7. So that's a very high forward PE. But keep in mind, this is a consumer staple, not a consumer discretionary. People are still going to drink Monster energy drinks in a recession. Nobody's going to give up on their caffeinated drink. They are addicted to them. So this is a very reliable product. The free cash flow yield's also a little lower than I would like. It's at 2.3%. Now, it's had phenomenal growth, but again, this is a more premium valuation for this company. So basically what we have here is a company that I think is phenomenal. I think it's going to continue to have good growth. I've been very impressed looking at Monster, but we have a problem with the price, and that's the downside of the company currently. When I plug it into my discounted cash flow spreadsheet here, this isn't set in stone, and this spreadsheet does not factor in all the risks associated with an investment, but it does give me a little bit of an approximation of what we're working with here. When I make the assumption of a 7% discount rate, I use a lower discount rate because I consider Monster Energy to not be an incredibly risky company. If it was a far more risky company, I would require a higher discount rate. I put in revenue growth of 10% on average for the next 10 years. I think Monster Energy can pull that off. Through price increases, through getting more people using their product, I think they could do 10% revenue and then a 30% EBIT margin, which last year they had 27%. Now, I think that's accurate as well because Monster Energy has been going through headwinds that have hurt their margins last year. So I think their normalized margins will be around 30% or even potentially a little bit higher. And then they have very little, almost no CapEx in the business. So we have very minor CapEx expenditures priced in there. And then this projects it over the next 10 years. And we have right here that the company currently has around 21% downside based on these estimates. So the price for the fair value would be at $43. The company right now is at $54, which looks about right. $53 seems a little expensive for Monster Energy, but you never know. Stocks trade around frequently. Monster Energy could trade down into the lower 40s in the future. If it does, I'll be looking at this company more closely. So as of right now, unfortunately, even as good of a company Monster Energy is, it's a little bit too expensive for me, but I am going to keep this one on the watch list. I do think it's a phenomenal compounder. I hope you enjoyed this analysis. Let me know what you think, and I'll see you in the next one.